Welcome to Markets Now. I'm Michelle Rook along with Chip Nellinger, Blue Reef Agri Marketing. A higher day except for hogs and grains. A nice rebound here. It's been a tough down week, Chip, but really some of the strength coming from some rising geopolitical concerns once again.
Yeah, I think on top of that, you've had really 2 weeks in a row that have been pretty ugly in here. Really extended it, kind of short term, oversold in a lot of these markets, particularly corn and wheat. Coming into a Friday, you had some, increasing tensions and some bombing in the Russian side now. Ukraine bombing Russian grain ports, and so that kind of snapped the market back up here. A little bit of short covering and some profit taking going into the weekend here. Also, slightly drier forecast, I'd say, compared to 24 hours ago. That's probably helping the cause today, putting a little bounce in going into the weekend.
So what's your thoughts here about the Black Sea situation, though? Because, we've had damage at ports in Ukraine, maybe now a little damage in Russian ports. The market has basically kind of brushed a lot of this off, haven't they?
They really have, surprisingly so. And I think, unfortunately, they may continue to do that because they've been rewarded. The shorts have been rewarded every time that you've seen a rally based on some new grain facility bombing in Ukraine or Russia. They get rewarded for selling the rally. I think they're being a little bit short-sighted, though, because to me, the whole thing has shifted. And now the whole war has become kind of focused on restricting grain trade. And I don't think that they're anywhere towards the end of it. Russia still has a lot of assets they could bomb and vice versa. And so to me, it seems like grain trade has become front and center in this war. And the market, corn and wheat market especially, have kind of shrugged it off, assuming that Ukraine's going to get out what we need for the rest of the world. I don't know if that's a good assumption, but it just may take a little bit longer. It may take several more months to figure out the ramifications of these recent attacks.
No doubt. And of course, yesterday, Romania saying that they were going to help get a lot of those, 30 boats loaded and off and into export markets and channels certainly did not help. So that's something we need to keep an eye on. So you mentioned the big pullback that we've had this week in corn and soybeans. Obviously, we've been taking weather premium out. What happens with this weather event over the weekend? You said we've taken a little rain out of the forecast, but if this thing confirms we get pretty good rains, can you put a fork in corn and soybeans for a while or not?
Well, you might be for a while. I think that we could be setting up if the rains develop and we have an okay August here for the next 2 weeks. I think we've got the potential. We'll have to see it in a couple of weeks to have a kind of a harvest low be put into place ahead of the Pro Farmer Crop Tour, which comes in the 21st. I think is when it starts, 21st of August. So I think the weather still matters. I think the fact that we bounced a little bit today in the overnight. Obviously, we had some Russian escalation there in that war, but also along with that, I think the market is responding to this drier forecast. So it knows that we're still, weather dependent the next 3 weeks, and it's really going to respond to whether we get this rain over this coming weekend that's in the forecast for a lot of areas. If that's a bust, I think they add some weather premium. If it looks like we're going to get some good general rains, probably going to be right back into seeing the funds add to their short positions in here next week.
Right. And then the yield debate will start in earnest ahead of the WASDE next Friday. A lot of private firms are already out with some of their estimates, and it looks like general consensus is maybe just a little bit lower yield, at least on beans now, or what?
Yeah, keep in mind that the USDA no longer does actual field surveys in their August report. We've got to wait till September for that. So I don't see them changing much. I think it's a non-event. You did have a couple private firms, particularly StoneX, out 2 afternoons ago with a 50.5 bushel bean yield. Now, they're not necessarily predicting the August crop report. They put that estimate out as to what they think the final yield will be. But if we're to realize that 50.5 bushels, that gets it extremely tight on bean carryout. So no margin on beans. There's probably more of a cushion on corn if we see yields shrink because demand's arguably too high and needs to come down on the corn side. But at the end of the day, I'm not sure we're going to get much, if any, market moving news on this report next Friday.
And let's talk about technicals because we are back below or back above some long-term support here in corn, beans back above that 200-day moving average. And those are areas that we kind of have to hold here, don't we?
For sure. My fear is that on corn and wheat, that the moving averages are certainly crossed for lower. You're getting a bounce, but history of the last 2 months tells you that the funds want to be short wheat and corn, and my fear is they're going to sell this bounce. Beans could be a different story. They kind of held where they needed to hold for the time being. If they can kind of gather themselves here and rally into next week, you might have a story that maybe there's a temporary low in place in the bean market. But again, I think weather plays into this, and obviously, as always, geopolitical issues with Russia and Ukraine.
Yeah, like I said, I think we're still holding a little weather premium in the soybeans because that's an August crop, and that's why I asked you. If you get these rains this weekend, does that change the story? So
Yeah, it would. And technically, if we close below yesterday's lows in beans, it probably opens the door up for a whole nother push lower and some profit taking on the fund's long position. Could be 60 to 80 cents very easily to the downside if we get the rains and this week's lows give way.
And then we've got that July contract, or December contract in the corn. The July low there was 481. That's pretty important too, isn't it?
It is. But the deeper we go in corn, I think it's just getting a little bit early. That's why I think we have the potential to kind of set up an early low here. If they push it below those previous lows, maybe into the upper 470s, low 470s, to me, that's getting about low enough for where we're at, and knowing what we know today as far as the conditions on this crop.
Cattle market, we're higher here, despite the fact that we have some higher corn prices, but a lot of that's just about some of this early cash has been better than last week, hasn't it?
Yeah, not much trade. Still, kind of a Mexican standoff here between the packers and the feedlots. They're getting further and further apart. But it did look like there was some early northern trade, $2 higher. I think that's kind of the general consensus for later today. At least $1, if not $2 higher. It's been very sporadic. I think a key to me in the big sell-off in corn here recently, you haven't really been able to see much strength in feeders. They are up nicely today, but I think that's really something that's a little bit concerning to me, that feeders stopped responding to these sharply lower corn prices recently. We'll have to see how the cash trade develops going into the middle part of August here, but funds have a big long position built up. They've made money being long cattle. Are they going to hold that on into the fourth quarter is going to be the question.
And every time cash is turned higher, we went up and made new highs. So that's going to be interesting to watch, I think.
Absolutely. I think we've opened the door up for a lot of volatility, and it's been easy being long and buying every break. Eventually, that's not going to work in cattle. We're going to uncover a much bigger correction. We haven't seen it yet, though.
What about hogs? Is this topping action? Are we rolling over there, you think, finally?
I think we might be right on time with the seasonal here. Coming into August, that's typically the time where you peak things out. We have seen some recent weakness in the cutout, and that's caused a lot of pressure. I think if there's a better feel here over the coming week or two that we've topped the cash market, you open the door up for a much bigger break in the October and December contracts here.
Yeah, except they've got a big discount.
They do have a big discount, which could be bullish, right? That's what you have to watch out for as well. If the cash doesn't break, if it's kind of a counter seasonal, extraordinary strength in the cash market deeper into August, then October's could catch fire here. So we really have to watch what happens in cash and cutout the next 10 days, in my opinion.
All right. Thanks for joining us. Chip Nellinger, Blue Reef Agri Marketing. That's Markets Now.